Hello traders, the title of the video is how to time financial market using WXY Elliott wave pattern. Alright, so let's get started. So I have recorded a video recently that I titled how to master Elliott WXY corrective wave pattern in 1 hour. So I've explained to traders all things that they need to know about that specific corrective wave, complex wave. So in this tutorial today, I will not go over those topics again. All I will do, I will refer traders to that video that I just mentioned, how to master Elliott WXY corrective wave pattern in 1 hour. All right. So that's what I will do. So I'm going to go today. What I'm going to do, I'm going to show traders, all right, how we can time a financial market using the WXY Elliott wave pattern. Okay. So using the same financial instrument, the dish network operated, we have seen on that chart the WXY. So this is, pay attention to the red letters on my chart. So a WXY pattern is completed right here. All right. So how do we use that to time the market? There are a few things that we can do. All right. So if, for instance, this is a practical trading, all right, we see a trending first. So there was a trending first. Then we see WXY. It's a combination of corrective waves. So you can see that WXY came to the 78% Fibonacci retracement of the prior trend. For traders that are following us at Day Pro Traders YouTube channel, all right, we know that the 78% Fibonacci retracement is considered in theory as an oversold zone. All right. You know that? Or if you do not know, or if you are not a subscriber of Day Pro Traders, subscribe please. So the price came to the oversold zone, the theoretically speaking, oversold zone, and a pattern is completed. You have to understand that when a pattern, a specific pattern is completed, all right, there is usually, all right, a change in the price. So a zigzag pattern is completed, there will be a bounce up. So here it is here, 1, 2, 3, a bounce up. So now again from 1, 2, 3, a bounce down. So that's why we are talking minimum price move is free. So the WXY pattern has 3 components: the W, the X, and the Y. So it's a 3-component price action. It has minimum price move free. So when we are using the WXY Elliott wave corrective wave or Elliott corrective wave, we are also talking about the minimum price move is free. But we want to use a multiple authentication, so to speak. All right, I like that word very much. Multiple authentication. Are you using computers? Do you have YouTube account? Do you have multiple authentication for your YouTube account? All right. All right. So, so as a trader, we can use multiple authentication. So a pattern is completed. A pattern, that pattern has brought the price into the 78% Fibonacci, 78.6% Fibonacci retracement zone. All right. The next step for us, all right, we need to check, okay, the market environment, talking about trading the market. So you want to buy and hold because you have identified a WXY pattern at the end of a bullish trend. A correction is completed, a pattern is completed. You are thinking to buy. All I will say to you, anytime we see the WXY pattern is completed on any time frame, if the prior trend is bullish, we will expect at the end of the WXY a bullish move. So there was a bullish trend. Now we see a WXY pattern completed here. we'll expect a bullish move. The WXY pattern also will help traders to pick the bottom of the market. I need to be careful because whenever I use the word bottom sometimes, all right, Google will, sometimes they think it has something to do with sex. Nothing to do with sex, all right? I mean, those are algorithms picking keywords, all right? So we, as a trader, we talk about double bottom chart pattern. So we pick the bottom of the market. It has nothing to do with all those, all right? I need to mention it, okay? So Google algorithm can understand that, okay, this is a clean topic here, okay? All right, so the point I'm making here is that the WXY pattern will help us to pick, okay, the turning point, okay, the turning point of a cycle. So here we have a trending phase, a WXY is completed. At this point we say, all right, probably the area wave cycle is completed here. We will be expecting a reversal. So we can use the WXY to pick a reversal signal. Beautiful, excellent reversal signal. Okay, but when you are doing that, the first thing that you should be expecting is the X wave. The second thing that you should expect is a trending phase. Because if you are expecting a trend, which is okay, if that trend fails, we will have the X wave. All right. So anytime we see a WXY, we can use it to time the market. Probably we are picking the early stage of the new trend or the early stage of the X wave. So if you were here, you'll be saying to trader, probably we will have a new trend if the market environment is good, the fundamentals are solid for this stock, all right, and so on and so on. And so you'll be calling this one first wave. So WSY is completed here. You'll be saying, okay, now probably there's a new trend. You say first wave, second wave. At this point in time, you'll be talking about the third wave. Yes or no? In this session. You will say, all right, now we are in the third wave. Here it is. It's not the third wave. It's 1, 2, 3. The trend has failed. That's why I say to you, the first thing that you want to expect is the X wave. And the second one that you want to expect is a trend. Because sometimes the trend will fail. Here you will be saying third wave. And people will say, George, you say that we are in the third wave. Look at that. The price crashed down. And I will say, one step at a time, you see? One step at a time. But when you were here, it's normal to say first wave, second wave. You will be saying, we are now in the third wave, all right? And you apply Fibonacci extension to your first wave, expecting your third wave, okay? If it's extended to break above the 161.8% Fibonacci extension level of your first wave. But surprise, surprise, the trend has failed right here, okay? Crashing down 1, 2, 3 again. So because the WXY is a complex wave, so you see the first one which is red, now we have another green one, WXY. So if you don't know what I'm talking about, it means that that video that I mentioned, you have to watch it again, or watch that video, right? So WXY. Anytime we label WXY, what are we expecting? A reversal. It's a powerful reversal pattern. And in order to control the risk, my friend, the first thing that you're expecting is a next wave, and the second thing that you're expecting is a trend. The trend may fail. That's why we want to expect first. Caution. That trend may not continue. It may end up being a next wave. Like here, you see 1, 2, 3. All right. Pattern is completed. There will be a bounce up. That bounce happen to be 1, 2, 3 again. Well, there will be another bounce down. Like 1, 2, 3. All right, there will be another bounce up. Minimum price move is free. 1, 2, 3. Oh, yeah, it's not going up more. There will be a bounce down. 1, 2, 3. Oh, if it doesn't go below that low, it will bounce up. Minimum price move is free, and so on and so on. You see, expect X wave first, and then the trend phase. So here you see the gigantic green one. WXY, forming what? A double bottom chart. So remember my favorite phrase, or multiple authentication. So here we have a double bottom chart pattern just a little bit below. So we have the 78.6% Fibonacci retracement zone and a double bottom chart pattern in just a little bit below that zone. And a pattern is completed, the green W, the green X, and the green Y. Will that be useful? So you see like this, you say, okay, there will be a bounce up. There will be a next wave, or even I may pick the early stage of a trend. So here you, as an Elliott wave trader, you say, first wave, all right, you say, George say should break a resistance. Which resistance breaking? You say, oh, all right, George, we give it a chance, all right? You, yourself, you say that, we give it a chance, okay? So you keep doing it like a little chart first time, and see whether there's a violation. Here there is a violation. You came back to the beginning, so you say, okay, probably, all right. So you are thinking, all right, is it a flat correction here? What's going on? Is it a triangle? Okay, you start drawing your things. Preliminary will count one step at a time. Okay, you start counting your waves. Okay, you say, all right, don't bash me on this one. This is a preliminary wave count. And so on, and so on. Okay? So here you will start counting wave, but the practically trading, all right, ignore my wave count here. I don't want to dwell on that now. Don't pay attention to it, okay? All I'm saying to you, a WXY is completed. The price has a high chance to go up for a while. That move can end up being a trend or end up being a next wave. You just go one step at a time because that pattern is completed. But in order to control the risk, you want to use a top-down trading method. So all you will do here, you draw your line, or here. I'll prefer to put it here because this is psychological price level. There was a low before the last low. So it went below it. You want it to go back above that low. And you start giving priority to bullish signal above the level of $14. And it tells you here, you implement a top-down trading method and take it one step at a time. If it's going up, you will start forming higher lows and higher highs. Using the price action alone, you will take it one step at a time all the way up here. Try form a new higher high, followed by a higher low, common set and escapool, invitation to buy, boom, up. Minimum price move is free, draw the line 1, 2, 3. Understand the language of the price. Pay attention to the price action, give precedence to the price action in comparison to the wave patterns. All right? So the W, so what I'm trying to say here, we can time the market, pick the early stage of a trend, the early stage of the X wave, using the WXY, a wave pattern. We can use multiple authentication. When the WXY is completed, check the Fibonacci zone, the 78.6% level, or the zone between the 50% and 61.8% level. Draw your trend line. Pay attention to the price action itself, all right? And then implement a top-down trading method to trade it. The WXY pattern is about the minimum price move is free, but we have two corrective waves that are joined by the X wave. The first corrective wave is the W, the second corrective wave is the Y. And in the middle, we have the X wave, which is a failure of a trend. All right. So with that, you go around. So you may see sometime a complex correction. Just break them down one step at a time. A flat correction, if you see a flat correction is completed, you will see a bounce. A zigzag pattern is completed, you may expect a bounce or a next wave or a new trend. Okay, if that trend fails, if the trend fell, we will call it X. So we may have a zigzag first. We are expecting a X wave or a trend. Trend fell, we have X wave, we'll expect another corrective wave. That corrective wave can end up being a flat correction, a zigzag, or a triangle, or a combination of those corrective waves. All right, and so on, and so on. Because after a trending phase, you see for this stock, okay, there was this trending further and in 2000, and the correction, this complex correction, lasted, okay, for almost 9 years. This is about a WXY. So with that, you have a trending phase, and we have a long-term correction. Look for a WXY to pick the bottom of the market in 2009. Look at that. This is 2009. The Y, here it is, completed right there. And the S&P 500 is also beginning a bullish trend. So this can help us to time the financial market clearly. So for this stock, okay, a gigantic WSY pattern is completed. At the point where the market itself, talking about the trending triangle, the market itself, the S&P 500, is beginning a bullish trend. All right? Isn't it beautiful? When the Federal Reserve was devaluing the dollar, and there is a lot of money coming into the stock market, there was a lot of cheap money around, and people are using that to speculate in a financial market. So we have multiple authentication, price below the 78% Fibonacci retracement level, the oversold zone in theory. A gigantic WSY is completed. All right. The policy made by the Federal Reserve is good for the stock market. All right. The market itself, the S&P 500, is about to begin a new trend. All right. So now we go to Google Finance. We perform Google Asset test. We check the sector, communication services sector. For this, we say, well, multiple authentication, it tick all the boxes. I will be interested to buy this stock and hold in 2009 and hold it for a few years. I don't want to speculate, day trading, swing trading. I'll buy and hold instead and give it a chance for a few years and see what will happen. All right, that would be a good strategy, yes or no? Using the area wave, okay, WSY, to time the financial market as a day trader, swing trader, position trader, even as an investor. So there are market cycles. So for this stock, the area wave cycle has ended right here. So we have the mini WSY. The trend has failed from an X. And now we have the gigantic WSY ending here. Now the question is this one a trend? I will not talk about that today. I will talk about it in another time. But even if it's not a trend, you bought it here in the zone of $14, it went up to $18, $80. All right. So one thing we can say also, when a WSY pattern is completed, any bullish chart pattern above that pattern, we will take it, yes or no. All right. If the prior trend is bullish and we see WSY in a bullish chart pattern or a bullish invitation to buy, we will take it. Okay. All right. So this will conclude our discussion today about how to time financial market using a WSY area wave pattern. If you have any question or suggestion, put in the comment section, and in the course I will be recording another video to answer your specific question. We are the TSTW24 traders talking about how to time financial market using WSY area wave pattern. If you find this video truly useful, let us know by giving us the thumbs up. If you think that is another blah 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 blah, mark it down please. If you think it's an essential tutorial, feel free to share it with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders. Happy to meet you all and speak to you soon.